The Dow closed up more than 90 points. The S&P 500 posted its best weekly gain of the year. My markets panel is here. Bear Lee Munson, bull Michael Lee. So Lee Munson, as our bear, why are stocks moving higher during a week when the free world is being attacked?
Well, I think this is some of the outgrowth of people having more certainty that we're going to get a Fed hike in December and some of those notes that we got from the Fed governors. I think outside of that, you have to realize we're going into a short week next week. There's a lot of opportunities for some downward volatility. And unless you're long-term and fully invested right now, in which case you don't have to do anything, but you have new dollars to commit right now, I would rather see how next week goes. We still haven't had a retracement of those lows from the August mini crash. So if you have new capital to invest, I would be a little slower, and I would, it's Friday night, I'd have a light Pilsner versus a triple IPA.
All right, we hear that. In fact, Michael, as our bull, I have to ask you, Nike announcing a stock split, announcing buybacks, just how high can we go?
I think we can go much, much higher. And the reason for that is the strength of the consumer in the United States. If you looked at retail sales last Friday, you take out energy, you're up over 4%. It was a negative day, but when you combine that with consumer sentiment, job openings at their all-time highs, you look at the weekly jobless claims at 40-year lows, the strength of the consumer is just jumping off our screens, and I guess other people are starting to look at this. The market has really taken this 25 basis point potential hike in stride. They've treated it as almost a certainty. I would be very cautious about that, but I'm positive on the market because I'm positive on America because the consumer is just going gangbusters right now.
So back to our bear, Lee, what do you make? Michael, like many, saying even if the Fed does raise rates, or let's just say it happens, we'll put it out there in December, what does this do to the stock market in your view?
I think that the Fed rate is more of a psychological trader effect, but let's be serious about this for a moment. Year over year, global growth is down negative. And while we love to talk about the Santa Claus rally and how it's going to save all, when you're looking at a diversified global portfolio, we don't have a lot of great news with global growth. And so I think that's why you have to be a little bit more moderate in your enthusiasm and not take this week as anything other than people feeling that there's clarity or a little bit more certainty. Be careful what you wish for, because if the market runs up too much, that means going forward into next year, there's less expected return.